going along with what you just said, Nicole, in regards to the like Dungeons and Dragons thing up there, I was watching something recently that was talking about how, weird in a lot of ways it's been this past year with everybody doing Zoom and nobody being like actually face to face. But on kind of the flip side of that, a really cool benefit that we've had is, how often are we in each other's homes? Like even on a virtual basis. Like how often that situation, Megan, where you're just talking about like the judge and the cat face thing, like how often does that happen where you're like seeing someone's walls, like their
Hmm.
pictures of their kids in the background, like their, just their lives are surrounding them. I feel like that like creates a sense of intimacy that you don't normally have, at least not in the professional setting. So,
Yeah,
Yeah,
you're
that's so true.
absolutely right. Yep.
well, I will go ahead and get us kicked off here. We were just chatting a little bit before before officially starting the episode, but um, welcome back to Face the Fear podcast, virtual edition. We're so happy to be back. Nicole and I took some much needed time off last year. Not like we didn't super miss Face the Fear and interacting with the audience and creating new podcast episodes, but last year for us, as I'm sure it has been for everybody, was just a whole lots of kind of crazy. So we feel refreshed and just excited to be kind of kicking off our season 2 of Face the Fear podcast. And no one better to kick it off with than Meghan Cormany. She is another wonderful Ash Brokerage employee. She is actually a disability income development specialist. Did I say that correctly, Megan? Okay.
Yeah, as well as I can. Absolutely.
Awesome. Good. And we've actually worked with Megan a little bit with IDIS, which is the International Disability Income Society. Megan is on the education committee there and invited Nicole and I to pop into one of their recent webinars and just talk about millennials and how to best connect with the millennial audience in today's day and age from the advisor perspective. So that was really neat, and we couldn't wait to invite Megan on to talk to us a little bit more about disability income and what that looks like for millennials and what that looks like for us today in the weird 2020, 2021 COVID world that we live in. So thank you so much, Megan, for being here. We're so happy to have you with us.
Well, thank you for inviting me. I'm looking forward to this. This will be fun. This will be my first podcast, so yay.
Yay.
And I love to, I mean, podcasts have evolved a lot the last year because typically you'd be sitting across from a table with someone, but
Mhm.
we can't do that right now. So we're doing like this webinar Zoom like version. But I just think it's awesome that we are all spread across different places and still able to connect. So very
Yeah.
cool stuff. So I guess just to get us kickstarted, would love to hear from you, Megan, kind of how you ended up in the role that you're in today and what makes you passionate about doing what you do.
Yeah. So I ended in disability. I don't even know how, quite honestly. I had a mortgage background, and in '08, when, or '07, when all kind of blew up, I ended up in insurance annuities, decided I didn't really like that, and kind of got into the disability role. Spent my first 10 years at Ash really working with underwriting in disability and seeing the impact that disability can have on somebody, whether they buy it young before things happen and then something catastrophic happens, or on the flip side, they wait too long and now they're medically uninsurable and trying to get it because they realize the importance. So my passion kind of grew out of that, and also having an incident myself where, thank goodness I had group insurance, but not everybody does. And I ended up having to claim for, a number of weeks. And so that kind of drove it home and really solidified the idea that I was where I needed to be.
It's a whole nother level when it hits you personally. I feel like
Yeah.
Yeah.
it's so hard to justify something like insurance in many different forms unless you personally experience the need for it, which, unfortunately for a lot of people can be too late at that point, or, you almost have the privilege of experiencing it through someone close to you. Like maybe, you didn't lose a loved one, but someone that you're very close to did, and, they either did or they didn't have life insurance, and that could impact that whole situation from a very positive or a very negative perspective.
Yeah. Yeah. And I think that, along with that, life insurance is an easier conversation to have, right? Because we all know that everyone is going to die at some point, but the chances of getting disability or disabled, nobody ever thinks it's going to happen to them. So usually when it's too late that people really think about, oh, maybe I should go ahead and spend the money on this.
Yeah. So kind of to that point, we in the past have done the podcast with disability with Tim Kukieza, season 1. And we talked about disability insurance and kind of an overview of that. What would you tell somebody that is in like their 20s or 30s who doesn't currently have disability? Like, why is it important to get it now versus, waiting till you're 40, 50?
Yeah, great question. So it is cheaper. So obviously we are all worried about budgets, right? All worried about where we're putting our money. So it is never going to be cheaper than when you are younger. You are likely healthier when you are younger. So even if you can only buy $1,000 or $500 a month, every little bit is going to help in the long run. And if you structure it right, as your income increases and as your need for protection increases, then you can purchase more later without having to go through medical underwriting again. So you lock in that rate when you're younger, and then later on, if your income jumps up significantly, or now you're a spouse and you have kids and all of these bills and things you want to save for, a disability can really impact that. So the earlier you buy it, the better rates, and just the opportunity to increase later is always there.
That's interesting. I didn't know that you could lock in like that. I thought you would always have to do underwriting every single time. So that's really interesting to learn.
Yeah, a lot of times they'll call it different things, but guaranteed insurability or future benefit increases, future benefit updates, depending on the carrier, they're all going to give you an opportunity. Now, sometimes that's not available, and usually when it's not available, it's because medically we have to take it off. But for a young, healthy 25 to 30-year-old, all day long, I'd put it on there. It's not expensive, and it ensures the fact that you can increase your policy later.
And that would be what we would call a rider, correct? For anybody
Yes.
that doesn't necessarily know. So we would call that a rider, something that you could add on to your policy, the future benefit increase. What are some other riders for somebody that would be like in their 20s or 30s that you see a lot being added or you don't see being added that should be?
I think that one's important. I think that for a disability policy, you should always have a definition that disability. So oftentimes when you buy a policy, your main coverage is total only, meaning you can't do your job. You're not going to work even one day a week, and your physician says you're not able to do your job, right? So that's a basic policy. But most disabilities at some point are going to fall into that partial category where maybe you can work 3 days a week or you're working 5 half days. So your income is lower, but also your time at work is lower, or your amount of duties that you can do are less. So having that partial coverage in your policy is probably the most important thing you can do outside of the definition of disability. So that making sure that that rider is on there, and oftentimes it's going to be called a residual rider. So having that on your policy is I wouldn't sell a policy without it, honestly. You would be doing your client a disservice. So Having that's probably the most important, then the guaranteed insurability. Depending on your job, a true own occupation, just meaning that if you couldn't do your job, but you could go do something else, then maybe you could collect benefits and your new income. That's, I mean, it depends. It depends on what your job is. If you're a specialized physician, absolutely 100%. If you do my job, probably not, because if I can't do my job, what can I do, right? But nothing's going to force me to go work at Walmart as a door greeter. Not that that's bad, but you know what I'm saying. So just making sure you know what your coverage is and what it all entails. One thing that I am just not a huge fan of on a policy is making sure there's a COLA rider. I know it sounds weird because we're all about inflation and that kind of thing, but it's extremely expensive for not a guaranteed benefit, and it doesn't do anything to your policy until you have been on claim for a year. So, and you're not even guaranteed a 3% increase. So I would say that if you're looking to save money, take that off, and just make sure you have a good base definition and a good partial definition, and you should be covered for, 90% of the cases.
Something that you just mentioned, Megan, was COLA, which some people may be familiar with that term, others not. COLA just means cost of living adjustment. So we all know how inflation can erode the value of money over time. Basically, what you could buy you, what you could buy with $20 20 years ago is very different than what you can buy with $20 today. That sort of concept. So, but it's a great point that you brought up, Megan, that even though everyone talks about, you need to make sure that you're keeping up with the cost of inflation, it doesn't sound like that rider necessarily does a whole lot for you unless you truly have activated the benefit and are taking it for a very long period of time. It's almost like maybe the cost of that rider doesn't necessarily provide as much benefit as someone might assume that it does. So that's a really good point.
Yeah, and that's important to know because with other lines of business and other types of insurance, cost of living adjustments built into a policy mean something totally different. So it's definitely good to know, and that's why you want to ask questions and you want to read through it and try to understand. And what you don't understand, definitely ask. One other rider that may be beneficial, especially for young people, is putting a return of premium on a policy. So, hey, look, there was a cat. Hey, Squirrel.
So sorry, she loves to be loved.
Return of premium could be something really beneficial, especially if you're looking at, maybe you just want a 2-year benefit period on your policy, right? There are carriers out there that offer a return of premium. You buy that plus a 2-year benefit period. Yeah, you don't have coverage to age 65, but if you don't ever use it, your premiums are returned back to you, and that can be very significant. So it could be used as kind of a little bit of a retirement vehicle if you chose to do that and didn't need to use the benefit.
So I have a quick question. Typically, from my understanding with disability insurance, when you obtain it, it's based off of your occupation. What happens if somebody gets that, in their 20s or 30s and they end up changing their occupation, late 30s, early 40s, or even into their 50s? How does that affect the policy then?
Yeah, great question. It's actually a question that comes up quite a bit. So when you buy your policy, typically you are locked in for your benefit rate, and your occupation class. Okay. What happens later is if you change jobs, say I'm a lawyer now or I'm a lawyer when I buy the policy and I decide I don't want to practice law anymore. Now I'm a teacher. Okay. Easy comparison. I still pay a rate based on being a lawyer. My occupation class drives my policy rate. So I still pay that rate. But at claim time, when I fill out my claim form, I'm putting down my occupational duties as a teacher. Nothing happens to my policy. they're going to base your claim and your own occupation or your whatever your material and substantial duties are based on what it is at claim time. So you actually benefit in that situation. You're in a riskier occupation class. It's a lower occupation class, but they're not going to base your material and substantial duties on being an attorney when you're practicing as a teacher. So most often that's how it works. There are a few policies out there that I think will require you to notify them if you've changed occupations. If you happen to get into an occupation where they don't offer coverage, they may go ahead and terminate your policy. But that's not common. Usually it's all handled at claim time.
So something that came to mind for me when we were talking about the fact that, it's beneficial to maybe get a policy when you're younger, ideally don't have as many health issues going on. And as your salary, hopefully increases over time, you can just get coverage up to those limits, as it grows. But is it typically like, does it work fairly proportionally? Meaning like, okay, say I'm, right out of college, I'm making 35,000 a year or something, and then I get, a great promotion, and now I'm making 70,000 a year, so my income doubles. Does my cost for that policy per month double in proportion to that, or is it more complicated than that?
Yeah, I wish it was linear. I really do, because it would be so easy to just say, okay, here's your price per thousand and run with it. Unfortunately, you could probably ballpark it once you have a premium, say for $1,000, and now you want to double your benefit to 2,000. You might be able to ballpark it. It's going to change slightly because there are other factors. Adding certain riders on policies affect premium. Your age will affect the premium. And when you increase it, that new premium is going to be blended with your new age. So you're still going to have your policy rate at 25, but if in 5 years you increase your policy, that then is going to blend it. So that's going to affect it. But yeah, I mean, you can ballpark it just for a general idea. But yeah, typically it's a little more encompassing.
Something that I have heard you say, and lots of other people on our disability income team say, which is really impactful, I think needs to be said more, is that income during your working years is your biggest asset.
Mm-hmm.
People don't look at income as an asset typically on like a balance sheet. They think of, my house, my savings account, my 401k, whatever it may be. But truly your earning potential is what keeps you going throughout your
Yeah.
working years. It's not your retirement account balance. That's great and it's important, especially when you get to retirement age. But what happens when you suddenly lose the potential to be earning income from some unexpected experience that happens? And that to me personally feels like the most convicting reason to be looking at disability insurance, because it's,
Yeah.
we obviously protect our homes as far as insurance goes, but to recognize, well, what happens if our income goes away? Then our house may go away too, because we can't pay for those mortgage payments. We can't pay for rent, whatever it is. So I saw that again recently, and I just felt like it's so important to just make that said, to make sure people understand like how truly important it is to protect income.
Yeah, it's definitely one of my many missions, I guess, in the role as sales development, is really solidifying the idea that if something happens to your paycheck, you're not paying for life insurance. You're not saving for retirement. You're not saving for vacations. You now have extra bills on top of whatever you had before. And even if you have a good savings account, one disability that lasts for a year can wipe out 10 years worth of savings. Easy. So just knowing that and just pushing it and pushing it, and hopefully someday the idea turns and it's like, oh yeah, I need disability just like I need house insurance or I need car insurance, you know? So that's definitely one of my missions.
Do you find, or do you know, or do we, I guess, see claims of different occupations that have the highest need for disability, whether
Yeah,
they've had it
so
or they haven't had it, and you're like, oh man, in hindsight, I wish I would have gotten it.
yeah, I saw your question on that and I thought, that's a really good question because everyone thinks, uh, oh, hard labor, right? When you think of somebody who's going to be disabled in a certain occupation, you don't think doctors, you don't think dentists, you don't think attorneys, you don't think of that. You think of heavy equipment operators, you think of mechanics or people who work in the construction industry, people who are hard on their bodies every day, right? Um, but claims history for physicians, for dentists, for chiropractors, are high, and it's not always because of oh, they had an accident. It's mental. It's stress. It's that whole idea around mental nervous. It's back issues from stooping over a lot over a surgical table or a dentist, bending over a lot, looking into people's mouths. So those kind of injuries can happen, and they're degenerative. So they start off not so bad, and then all of a sudden it's, oh, I can't get up every day or I can't do that anymore. So I would say that the risk of claim is spread pretty extensively.
Mm.
You're going to see likelihoods on both ends. So yeah, I mean, obviously they classify riskier versus not, but I think that's just inherent risk versus what they actually experience.
Gotcha.
That's really great.
So this was something that we touched on briefly when we had Tim Kukieza on our podcast a while back, which was something that you just mentioned there about the mental health component of
Hmm.
disability insurance. I think so often people just think, oh, someone gets in an accident, they are in a wheelchair, and then they can't work. And that's like a very small definition of when disability insurance comes into play. But another huge part of that is, I think um, growing as far as just being discussed and not being so taboo today is people needing to claim disability insurance for just mental health reasons. They
Mhm.
they can't take the stress anymore and they're unable to perform the way that they can because of that. And I mean, I'm even thinking doctors, the amount of stress like a
Yeah.
surgeon takes on every day, some people are just cut out to take that on and they're able to handle it really well. But also think about it in the sense like they take on so much stress, and if you're on the operating table, you probably want your surgeon to be as clear minded and as, just having as clear of a mind and as much energy as possible while he's doing surgery on you.
Mm.
And it can be a very reasonable, it can be a great reason for someone to take disability insurance if they are dealing with mental health. That was a
Yeah.
very long preface to just say what exactly qualifies for someone needing to, take disability insurance based off of a mental health situation.
Yeah, as far as claims are concerned, so they consider it, they call it mental nervous. So they lump a lot of things into that definition or that claim. It can be anywhere from depression, it can be anxiety related, it can be work related stress, it can be substance abuse. You see that a lot too, especially in that field and others. It can be substance abuse, it can be alcoholism, you can have cognitive issues, traumatic brain injury type stuff. So all of that is kind of all encompassing, and it can either be organic or it can be as a result of, maybe I was into a car accident or whatever, prescribed pain medication, and now I'm addicted, and now I need to seek treatment. So that those are all part of that.
And something else that I think is affecting the mental health component a lot right now is COVID. And, not only has that unemployed a lot of people, but has just affected a lot of people from a mental health perspective as well. So do you mind just touching on kind of what you've seen happening in the disability insurance world since COVID started about a year ago?
Yeah, COVID, the bane of everyone's existence, right? Yeah, so a couple of things with COVID. As it results or as it relates to disability, you would have to actually have it and be disabled because of COVID for your policy to pay. So if you're unemployed because of it, or if your job laid you off because of it, it's not a disability claim, but you would have to have contracted it, and it would have had to be significant enough that you would be out for your elimination period, which is typically 90 days. So I know I personally had COVID, and I was down for a good couple of weeks. I was not doing much for a good couple of weeks. So I wouldn't have been able to claim on a disability policy, but there are several other people that have had it, hundreds of thousands of other people who have ended up in ICU. And in that kind of a situation, absolutely having a disability policy would be great for them. As it relates to underwriting, uh, COVID has thrown a lot of wrenches in disability as a whole. And then when you get into the underwriting of it, um, if you have had to shut down your business for a few months last year, it's more difficult to get the coverage, even though maybe now you're working again full time. A lot of carriers are putting a lot of really hard hurdles to jump over to get these people insured. Partially because they want to make sure that they're insuring a profitable business, right? They're insuring people who actually are going to show an income. But that the financial aspect has really been difficult to overcome in a lot of situations, especially for business owners. W-2 employees, not so much, because as long as you still have a job, then we're okay. But it's the self-employed, especially the small business owners and the restaurateurs and all of that that are really getting pushed around in the underwriting.
Yeah, that kind of brings up like another topic. Millennial generation, like our generation, a lot of us are, not necessarily us, but a lot of this generation are self-employed and have like side hustles and like side businesses, like that kind of thing, which can have like an inconsistent income. How does that affect the process of applying? Do you have to have a full-time job and then they just don't take the side hustle into consideration, or do they look at the entire person?
So it really depends. It depends on the carrier. You definitely have to have a full-time job. Full-time for disability is 30 hours a week. So consistently 30 hours a week at one job. Unless they're related. So like a common one is a dental hygienist. A lot of times they are part-time. But maybe they work in two different offices, right? So something like that we can consider as a lump sum income. But if you have two jobs, say you work at Ash Brokerage, but then you also sell 31 bags, I don't know. Depending on the carrier, sometimes they'll include that income, but they'll classify you lower than what you would if you just had the full-time job. And sometimes carriers won't accept income from multi-level marketing type situations. So it really is just going to be a case by case scenario on what we can consider and what we can do with the extra income.
So I'm thinking of someone who is, getting their business off the ground. They are working for their own business full time, but it's definitely in the early stages where like they might not have any income for a few weeks at a time, and then they have, tons of sales and their income jumps. So in that sort of a situation, would that person need to wait typically like maybe a year to at least show kind of like an average income before going to apply for DI, or how would that work there?
Yeah, so with startup businesses, income proving is difficult. Proving your income is difficult. So generally what they'll ask for is 2 years of tax returns, so 2 full tax years, and they're going to look at the net income. So that's where, and I don't know if in the last podcast that Tim had mentioned this, but that's where the differences lie in looking at a W-2 versus a self-employed individual. Is for W-2, we're looking at gross income. Self-employed, we're looking at that bottom line number. What is it after you write off all of your expenses? What are you actually paying taxes on? So for a startup, it's really difficult to prove, right? Because they don't have a track record. So in that case, you would want to do 2 years of full taxes, and then they would likely average that. Now, if you have somebody who is going from being a W-2 employee, same industry, but starting their own practice, sometimes we can take about 65 to 70% of the previous W-2 income and base our benefit on that. Just knowing that, they're getting going, they're going to make it, and then we'll be able to increase later.
Yeah, that's interesting. Some companies, I'm going to kind of just abruptly switch topics if that's okay, Kaitlyn. um, some companies will offer disability insurance. How does that differ between, what your company would offer versus like if I were to take out my own disability insurance policy? What's the difference look like there?
Yeah, actually, it's a great question. So, a lot of times, if your employer is offering it to you, it's taxable. So, like our benefits, we get a disability policy. Our company benefits, those benefits are taxable to us. So while it may be 60 to 70%, depending on short term or long term, um, you're not seeing that because most of that's going to go on taxes. So your individual policy, tax free on the benefit side, and that's portable. You don't have to worry about if you change jobs, losing your policy. Your group policy typically stays with the employer. Now, a lot of times you can convert that to an individual policy, but a lot of people don't know that, and a lot of people don't think to do that, and or they can't afford it. So that those two things, taxability and portability, that's usually the big difference.
Yeah, I would never have thought about doing that with disability. Like you think of like life insurance when you leave one job, maybe converting a part of that if you don't necessarily want to go through underwriting, but I would have never thought about disability
Yeah.
insurance. And that's so interesting with especially our generation with how often we do change employers. I feel like our parents, like their generation, they went with an employer and they stayed with that employer, whereas we can tend to stay in the same industry, but change employers. So that's interesting to know. I did not know that.
Yeah.
Sorry, Kaitlyn, did you have a question? Go ahead.
Well, I was just going to go off of what you were talking about with, differences in the millennial generation, the upcoming Gen Z, and previous generations, and looking at that from the retirement perspective as well, because, a lot has changed as far as where we can expect to get income in retirement versus where maybe our parents or grandparents were expecting to get income from in retirement. For example, we don't really have pensions anymore. That's very rare. That was more common for our grandparents. We don't necessarily have a whole lot of, we don't know what's going to happen with Social Security. There's a lot of uncertainty there, and we still have time to figure out legislation, but it is kind of a question mark. And we're living longer. Our life expectancies are increasing as medical equipment and technology is improving. So all of this kind of leads to more pressure on us to be saving for our own retirement at some point down the road, which can feel pretty scary and uncertain. But taking that into account, how does disability insurance play into all of that? Why is that also an important component to be considering when it comes to our, retirement outlooks down the road?
Yeah. Well, I think just to reiterate a couple of things that we mentioned earlier is if you are unable to earn a paycheck, you are unable to save for retirement. That's like bottom line number one. If you can't earn a paycheck, you're not putting money away. I think the importance of a return of premium for a younger individual, if they can afford it, because it is an expensive rider. But if you look at what you're gaining on the back end of it, if you never use your benefits, like everyone thinks they're not going to, right? That can be a sizable amount of money. All the premiums you pay in, you get back at 65 or in 5-year intervals. Some of the carriers are different. There are also carriers that offer retirement protection. So one carrier we work with, specifically Principal, they have a retirement security rider, but it's a whole standalone policy. And it's not based on the amount you contribute, it's just based on a percentage of your income. And so if you became disabled, you would get your monthly benefit, your normal monthly benefit, but then also a benefit amount is going to go into a trust that is going to earn you money until you retire. If you are only disabled for 5 years, great. But if you're 30 and now you're disabled and you're totally done and you're disabled through 65, now you've been collecting that retirement benefit for 35 years. That's going to be part of your retirement. I mean, that's going to be there for you. So, they are answering that question a little bit, but it's not sold a lot. And I would love to see it sold more. So just the idea that you would have that front end retirement protection and your monthly benefits so you can continue to live, but then also you're saving for retirement.
I think it's exciting to see how the industry is evolving with the changing times. I think, we wish there was more of that, but it can be hard to look into the future and really understand the importance of why it's necessary to think through all of this and actually have different ways of saving for retirement before realizing like, oh man, I want to retire in 10 years and I've got a lot of catching up to do type of thing.
Yeah.
So that can be difficult, but I'm even encouraged by the fact that, there's new legislation coming out where, thinking of the millennial generation specifically, we've got a lot of student loan debt that we're trying to pay off. And for a lot of us, we're, working so hard to get that student loan balance down that we're not necessarily able to contribute as much to our retirement plans as we'd like to. So the fact that employers can now match our payments on our, payments on gosh, I just like lost my train of thought. Payments on our student loan balances, that is amazing because we could be not putting a dime into our 401k. We're just working hard at paying down those student loans. And our employer is saying, you know what, I see what you're doing. I see the burden that you're carrying. I'm still going to put some money in your account on your behalf that's going to be, helping you build that retirement balance down the road. So just the fact that people are becoming more innovative and, legislation is taking place to help us is very encouraging. And I'm hoping to see a lot more of that.
Yeah, it is encouraging to see that they are looking at how they can help the problem, because our generation, the student loan debt in our generation is insane. And you need help. People need help, especially now.
So,
without a doubt.
I think that we covered this a little bit with Tim Kukieza, but if someone is ready to actually sit down and get some disability insurance, what's the process look like for them? What's kind of step 1, 2, 3 to get them started?
Yeah, so assuming we've already gone through the step of quoting, right? Assuming they've got a quote in hand and they say, you know what, this is what I want. Uh, a lot of things have happened in this last year to make underwriting easier, especially in what we would consider the white collar market, right? With those carriers. So historically, anything over $6,000 of benefit, you would have labs, you would have an exam, you'd have a telephone interview, you'd have all of these things. Um, because of COVID and because the ease of underwriting it was not easy to figure out how are you going to get a paramedical examiner in somebody's home during a pandemic when nobody's allowing anything, any kind of interactions. So what has happened is now the limit with most carriers in that space is $10,000. So anything under $10,000, sometimes there's an age requirement of under 50, but you're going to see no labs, no exam. You're going to see some carriers changing the phone interview to now all they have to do is click on a link and fill in their part B, send it back to the carrier. So it takes away the idea that you have to be sitting by the phone. You have to, wait for the phone call. So they're going to have maybe labs, maybe exams if they're over 10,000. They're going to have to show financial insurability, so W-2 pay stubs or full tax returns for self-employed. And they may or may not have a phone interview. Like I said, some carriers, principals specifically, have an online Part B. Then the underwriting process is all based on their answers to their Part B. So whether or not the carrier has to pull medical records, that tends to be the most time-consuming process, is waiting on those medical records to come in. But once we get those, underwriting can get through in a couple weeks. And then typical turn time, I would say 65 days from start to finish, that they would have their policy in hand.
That seems so quick.
It does, right? But
Yeah.
when you're in the middle of it, it's
Yeah.
like, I don't have my policy already.
Do you think that this will become the new way of underwriting for disability with, not having to do the exam for, under or for over 10,000, you have to do one. But do you think that this will now become more of the norm, especially for the younger generation that's trying to apply?
Yeah, I think that, well, all carriers are looking at ways to make the process easier,
Mhm.
streamline it, make it more palatable for people. I think that's only going to get better. I think you're going to see the disability world that is usually behind, right? We're always behind on technology, e-app, all of that. I think you're going to see more of that coming out. I think more carriers are going to go to that e-app. One, it benefits them because they get an application that's in good order. So you have a lot less going back and forth. But I do think the ease of the process, the whole thing is going to be a lot easier for the generations to come.
Yeah, I think that I'm kind of hoping that they keep it that way. I feel like it's a little bit easier to sell that way than the way that it currently is, just from the small amount that I've
Yeah.
done of it.
Yeah,
Um,
there are improvements to be made for sure.
yeah, absolutely. Do you have any like I feel like we're getting towards the end, and this is a question I wanted to wait like towards the end because I feel like maybe we'll go off on a tangent. Do you have any like real world examples that you could share with us that you have seen or that you know of where people
Sure.
like either have had insurance or they haven't had insurance?
Yeah, actually, I have a couple. So I can share my personal experience, and it's not. I mean, it could have been a lot worse. Let's just say that. But it was a March 1st, nice brisk day. Walking into the office, I had parked my car, and there wasn't much snow on the ground. In fact, it was warming up. I found the only piece of ice in the whole parking lot slipped and fell so quickly that I didn't even have time to really like brace myself or anything and broke my back. I fractured my back in the parking lot at work. Luckily, it was like 8 o'clock in the morning, and people are just like flying in. Luckily, I didn't get hit. That's first of all. Luckily, I didn't get hit by a car. But also, luckily, somebody heard me like screaming for help because I couldn't get up. I couldn't move. They helped me up. I walked to my desk somehow, and my boss Tim was actually in the Fort Wayne office that day, and he goes, "What's the matter?" And I said, "I think I need to go to the hospital." And sure enough, I was at the hospital. I was off for 5 weeks with a fractured vertebrae, and now I made a full recovery. I didn't have surgeries. I was young. I was 27 years old. I had a 2-year-old at home, and my husband was at the time was home with him, and so luckily we had group insurance. Luckily, I did not have a policy on myself outside of group. But luckily I had group insurance. Luckily my employer had workman's comp because it was also under that too. Because all of that plays together. But yeah, 5 weeks later I was back, and I was, back at work with very few restrictions. So that was my example. Like I said, it could have been a lot worse. I was at a conference, gosh, probably 2 to 3 years ago, for IDIS. And we always try to have real world examples on, the claim side. And this gentleman came up and he was speaking, and I don't recall how old he is now. I want to say he's in his 40s somewhere. But when he was younger, in his late 20s, early 30s, he had suffered a stroke. And unfortunately, on his disability through work, he elected, it was voluntary coverage, he elected not to take it. And when I say this man lost everything, he literally lost everything. He lost his job, the financial burden, he lost his home, he lost his family, because, you don't think of your rock or your support system disappearing, but it happens. It happens a lot of pressure, a lot of stress. And it was a very sad story. And I just think of that and I'm like, if you have the opportunity to either have voluntary group coverage through work, it's a small price to pay for peace of mind. So while I'm not great at reiterating stories, those are the two. Well, mine obviously sticks out. I also, just really quick, we have testimonial videos on our resource page. And I tell people, if you ever want to cry, just watch these short 2-minute videos, right? So if you're ever feeling like really happy and you're like, oh, I just need to be brought down a little bit. There is one video that just sticks out to me, and it is this young guy in his 20s. He was fresh out of college, starting at a new practice firm wherever he was working. He was out with some friends, crossing the street, got hit by a drunk driver. Now, luckily, now this guy was just completely mangled, in the ICU for a long time, still is not working, has cognitive issues now, traumatic brain injuries, still is unable to work, but luckily he had a financial advisor, probably from his parents, who sold him disability policy. And thankfully, he's now covered, and he has that extra income coming in where he would have nothing. And he's able to hopefully figure something out for a long term. But that story, I was like, oh my gosh, that's so sad. But how many millennials really have a financial advisor or have somebody who, they believe enough that it's, yes, you need this. And if you only buy a small policy, buy that small policy, because any little bit's going to help.
Mm-hmm. Sorry, I kind of laughed during your story of the ice because I did something similar on our front steps. It like in
Yeah.
Indiana, it changes. Well, even in Michigan, probably where you are, Caitlin, it changes so quickly. And like I
Yeah.
didn't understand that the temperature had dropped because it was raining and we have concrete steps. And it's like I had cowboy boots on. Like why I was wearing cowboy boots when it was like raining anyway, right? Sorry for the cattail. Um, I walked out our front steps and I like just boom hit it and I hit my back on all 3 or 4 steps that we have
Yeah.
along the ridge there. And yeah, like that. Oh, I mean, you know what I wonder is like Caitlin, Texas. Like, I wonder how many people now wish
Yeah.
they had disability insurance or are going to have to make claims because of something that happened weather-wise.
Yeah.
Gosh.
Absolutely. And, just to give a short synopsis to our audience here listening to this, we are recording this on February 19th of 2021, and the last week has been like a historical blizzard in Texas and other areas of the country that caused like really serious power outages, water shortages. Like Texas got, at least where I was staying with my parents during this time, Texas got 6 inches of snow in like twice in one week, which
Oh my goodness.
I don't know when that's happened in the past or if it's ever happened in the past, but needless to say, they were absolutely not prepared with the infrastructure to handle that. So, I mean, people were just putting like sand on the road to try to create some traction on ice and snow because there's not like industrial salt down there to be able to clear the roads off. So yeah, I mean we're just starting to see the aftermath of what's going on there, but I'm sure a lot of people are probably experiencing injuries from just never having to
Yeah.
ever walk on ice and how you handle that and car accidents and things. But to bring this back to a happier note through that whole experience, when I was staying at my parents, uh, they had some neighbors who came out on their street, which they kind of live on a hill, so there's kind of a nice slope, and they had just enough snow where they decided they wanted to go sledding. Well, if you live in Texas, you probably don't own a sled,
Yeah.
but you do own river floats and river tubes. So they came out with
Huh.
this big inflatable pineapple tube and were like running, jumping on the pineapple tube and sliding down the hill. So I don't think anyone was injured, so no disability claims there. But yeah, pretty funny.
Oh my,
Isn't it interesting? I mean, I've lived here basically my whole life, and I'm still not prepared for a foot of snow and all of the shoveling and digging everything out and yeah, and everything that comes along with winter in Indiana. I'm over it.
I think it's optimism where we kind of always think maybe if we don't buy that shovel, it just won't snow. And it's like, that's
Yeah.
not how it works.
No,
yeah.
Even
definitely
my
not.
parents lived in the Midwest for most of my life, 20 plus years. And my dad, we had some acreage too. We lived out in the country, had a lot of land, a lot of snow in the winter, and he never bought a snowblower. You just would hand shovel that
Oh my
all that. It would take him hours. Finally, he broke down. He got a snowblower, and then I kid you not, the next year they decided to move to Texas. So don't be my dad. If you need a
No.
snowblower, if you need a shovel, get one.
So, just as a related thought to that, have you seen the electric shovels that are like handheld snow blowing shovels? I kid you not. I'm investing in them. Like $80 on Amazon, totally worth the price.
What? I'm writing that down. I'm typing it.
Shovel it, you shovel, and it just blows the snow 20 feet away from you. I mean, totally worth it. Yeah. So there you go.
When
Where
we were
are
out
you
shoveling the
going?
other night, I was like, now do you wish, when I asked in October if we should get a snowblower, do you wish
Yeah.
that we would have gotten one? And Matt was like, well, I don't remember asking, but now I do remember. Now that you say that, I'm like, yeah, we're gonna get one.
I should have gotten one as well. I did not.
So I have one quick question before I think we wrap this up. When it comes to disability insurance, is it like you use it one time and you get your benefits, and you can't use it again, or can you have multiple claims throughout the policy life when when you're paying for it? Say, you do end up in the ICU for something and you have that 90-day elimination period that you've met and you do make a full recovery and you go back to work, and then something else happens again. Um, can you use it again?
Absolutely.
Okay.
Yeah, so a lot of times what you want to look at is the definition for recurrent disability. But if you buy a policy and say it can be anywhere from a 2-year benefit to age 65. I mean, it's any of the benefit periods, any of the policies. If you go on claim and say you have a 2-year policy and you use those 2 years and then you go back to work, as long as when you're back to work you continue to pay your premium, then something else happens to you 5 years down the road, you've got another 2 years to claim on your policy. If I have a policy and it's a 2-year policy, I use 6 months worth of my benefit, I go back to work, and within a year I'm back out because of the same issue, I only have a year and a half left. So recurrent disability and a whole new disability, those definitions do change a little bit, but yes, you can absolutely claim multiple times on your policy.
Very cool.
Well, I think that's really all the questions we had at the moment. I'm sure we could always keep the conversation going, but
Definitely.
anything, Megan, that we didn't ask that you feel like is important to share?
I think we covered about everything that I wanted to make sure that I brought to your attention. So yeah, I think I'm good.
Thank you so much.
Yes,
Thank
thank
you.
you so much for joining us. This has been an absolute pleasure. And for anyone who is watching / listening to this podcast and maybe had a question come up from something that we talked about, feel free to email us that question at facethefearfw@gmail.com, or reach out to us on our social media. We'd be happy to get that question over to Megan for her to get answered. You can also always find Megan on LinkedIn as well. Megan is Meghan, and last name Cormany, Cormany. So reach out to Megan. I'm sure she would love to connect with you, and look forward to seeing y'all. Well, probably seeing. I'm guessing our next podcast will be virtual like this again. So seeing you all on our next podcast episode very soon. So thank you, and have a good one.
Thanks, ladies.
Thanks, Megan.
Bye.
Bye.